Welcome back, investors, to Ticker Time News. I am Adam. Thank you for joining me for the After Hours show. It was a rocky day in the markets today, and we've got some talking to do about that. And we're going to go deep on Costco and their earnings and what happened. Why did the stock sell off, even though the earnings weren't that bad? We're going to go into detail about Costco and share a little insight on Costco and how they're one of the remaining old school reporters, and they actually report numbers every single month. So their earnings aren't really a mystery. So we're going to dive into that in today's live stream. It's Friday, so we're going to keep it short. But remember, the most important thing, the whole reason why we do this live stream is for you. So if you have a question, leave the ticker symbol in your question in the comments. We'll go over it live during the show. So thank you again for joining me. All right, let's get right into it. The market today. The Dow Jones lost almost 200 points for the fourth straight weekly decline, while the S&P 500 fell 0.8%, the Nasdaq 1.7%, and the Russell 2000 dropped 1.6%. Market sentiment today remained dominated by war headlines, with Russia forces attacking and taking over Europe's largest nuclear power plant in Ukraine. Now, on the earnings front, Broadcom, it was up 3% today, ticker symbol AVGO. It was an individual standout in the market, and again, it rose 3% on good earnings and good guidance. Well, Costco, it fell 1.4% alongside the broader market, as the market did, but earnings were better than expected. So why on earth would Costco earnings fall? More on that in just a moment. Now, on the data front, the American economy added 678,000 jobs in February of 2022, the most in 7 months, and way above market forecast of 400,000. Now, the bigger story in the employment report was the flat month-over-month growth in average hourly earnings, and that's a big deal. With stagnant wage growth in an inflationary environment, plus $115 per barrel oil prices, that does not paint a nice picture for consumer spending. Okay. The market did pair some losses this afternoon, leaving 6 of the 11 S&P 500 sectors in negative territory, including the heavy-weighted financials. They lost 2%, and information technology lost 1.8%. Those were the two sectors at the bottom of the list. Now, energy sector, that rose by 2.9%, thanks to elevated oil prices, like I said, $115 per barrel, which gained momentum amid news that the White House was considering a ban on Russian oil imports. That would be huge news if that does happen. If the White House decides to, well, you know what? Under Trump, we had energy independence. Why not do that again and stop buying oil from Russia? That would definitely hurt the Russian economy if America could do that. So, will that happen? We'll have to wait and see, but the rumors were swirling. Now, utilities were also up 2.2%, real estate was up 0.8%, healthcare up 0.5%, and consumer staples up 0.1%. Those all climbed higher amid a defensive positioning or strategy in the market today. Now, the Treasury market, it remained a signpost for growth concerns and a place for investors to seek safety. Now, the yield curve flattened, with the 2-year yield declining by 5 basis points to 1.49%. In the 10-year, it fell by 12 basis points to 1.72%. So here's where we stand year to date. The Dow Jones is down 7.5%. The S&P 500 down 9.2% year to date. Russell 2000 back in correction territory, down 10.9% year to date. And the NASDAQ, it just stays right in correction territory. It just can't get out of it, down 14.9% year to date. Now, before I jump over to Bitcoin and Ethereum, I want to look here at the S&P 500 because crypto, it had a bad day today. Look here at the S&P 500. A couple things that I want to point out. First, the bottom yellow box here, right? Today, the wick dipped into that yellow box. The last time that happened was on March the 1st. So today, the S&P 500 got as low as 42.84. So it dipped below 4,300 and it got into the 42s. It ended at 43.28, right? So it dipped down there. That was early this morning when it was down there that low, and it slowly climbed its way back up, especially in the afternoon. It kind of accelerated a little bit. So I just want to point that out, that the last time it dipped into the yellow box was March the 1st. What happened after that? We had a rally. Now, I'm not saying Monday we're going to come back in and have a rally. But let's also consider this. On February 25th, which was a Friday, we had a rally, 2.24% in the S&P 500. The next day was a Monday, or the next trading session was a Monday, February 28th, and it was basically a flat day. Here's what I'm thinking, okay? March 4th, we come back in and start trading on March the 7th. We are then 1 week away from the FOMC meeting, from the Fed getting together and raising interest rates by 25 basis points. I think the market is going to seesaw right here at this level until the Fed comes out and Jerome Powell starts talking about their plan on March 16th. When he comes out and does the press conference after the FOMC meeting and announces rate hikes are going up, quantitative tightening is beginning, and rates are going up by 25 basis points. If Jerome Powell comes out and sounds just as hawkish as they have ever been, the market's going to continue down, and it's going to go below 4,200 on the S&P 500. If on the 16th, when Jerome Powell comes out and speaks, if the Fed sounds more dovish, then I think the market's going to rally. I do believe that would happen. Now, until March 16th, and I'll put a line here on this chart to mark the 16th, which is right here. Come on. Here we go. This vertical line right here. Okay, this vertical line. This is March 16th. So from where the last candle is for today, March the 4th, all the way over to this purple line, I think the market is just going to seesaw and it's just barely going to move until we get there. And then that press conference is going to decide whether this market is heading lower or if this market is heading higher. Hawkish and the market goes down. Dovish and the market's going to go up. So let me put this on here. So that way we all know. I think the market is going to go sideways until it reaches this point here on the 16th. And then it's either going to go up and break above that resistance. Remember, the S&P 500, it has resistance right here at 4,400, or the market's going to go down. And I'll change this color here to red and finish making my little art show here. My artwork. All right. So that's it right there. The market is going to trade sideways. We'll probably keep that 4,400 resistance, and we'll probably keep this support right around 4,300 on the S&P 500. The only thing that could change this plan is if Putin does something crazy, just absolutely bonkers. Then that could send the market down premature. Okay? So we have until this very specific date, March 16th, and then the market's either going to go up or down. And I do believe until then, just to recap, I think we're going to keep resistance at 4,400, and then we're going to keep support somewhere around 4,300 until then. And we'll just pinball around until we get to March 16th. So we have a whole week of trading in front of us, plus 2 days. Yeah, a whole week of trading plus 2 days. So we've got 7 full days of trading before the press conference and whether the market's going to go up or down, okay? So that's my thoughts here on the S&P 500 and what's going to happen with it, okay? All right. Can we talk about all right, yeah, absolutely. All right, just finished up there with the S&P 500. Let's go. Now, I like Ambarella. Now, they just got hit here on their earnings report. Ambarella is a nice company. I like them. I think I did a video on them a little while ago, a standalone video, and talked about them. I'm just pulling up on the terminal their latest earnings report, so I've got the fresh numbers here in front of me. Now, they sunk because of those earnings that came out, but all right. So here's Ambarella on the chart. They had a nice uptrend, right? Really nice uptrend, and then it got wonky, and then Ambarella fell. This latest earnings report right here, they beat. They had an EPS of 45 cents a share, and it was estimated at 42 cents. So they beat by 3 pennies. They had estimated revenue of 90.15 million, and they came in at 90.22 million. So they beat on top and bottom lines. The problem was supply constraints. They have a big supply chain problem in front of them, and that is the biggest impairment to their growth. So guidance is what pulled Ambarella back down. Now, for that, the main takeaway, I guess I could say, from their earnings report here, and then we put a marker on it right there, is that Ambarella is struggling through the same supply chain constraints as many other companies out there, and many other in the semiconductor companies that are out there. If we look at how NVIDIA has been performing, NVDA, just as a quick example here, a much bigger company. I know they don't do the exact same things, but they have also been falling since they reached this peak here on November the 22nd. They are finding a little bit of support, though. Also with Ambarella, the sell-off for Ambarella, and let me go back there to their ticker. Ambarella, their valuation got a little too far in front of them. And with this pullback here, and then the bigger drop off here from earnings, I believe is an opportunity. I believe it's a great opportunity. I think that this company can really survive. Now, if we go back here and look on the chart, okay, it is very interesting that it has landed down here sub $100. Because if we go back and look at this box right here, and let me just circle it so it makes a little more sense of what I'm talking about. If we circle this box right here, this is sub $100. And I'll change the color. We don't need it to be negative because this isn't negative for the company. If we go back and look, this was Amberella being range bound with sub $100, like 105 being the top of the range, and then the bottom being about $90. Okay, and it's at 87 today after dropping, 6.2%. So it was range bound in here for a long, long time. For we can actually go 1, 2, 3 for 4 quarters. It stayed in that range for a solid year. Then it started running up because more people started getting interested in Amberella, and more people started exploring and doing their due diligence on the company and said, you know what, this is a company that I don't think Nvidia could be around without a company like Amberella. Actually, I believe I said that in my video about Amberella. So the valuation then ran up and got too far in front of the company, and this pullback, it's pulling back right down to where I think it should be, and I think gives the best opportunity to start adding on to shares of Amberella. So just a quick take there on Amberella, the stock chart, and I think it's very important that it stays in this range, sub 100s. It could get down to 85. I think over here, what was this final low right here? This low was $82.59. So if you're sub $90 and you're picking this up, you're getting yourself, I think, a good deal. Now, with this valuation, one more thing I'll add is because the valuation got a bit stretched on Amberella, I think it just made it a good target for this pullback. But I believe where it's at right now is a great opportunity for adding shares. That's what I'm doing. I do own Amberella. Maybe I should have started this out by saying, yes, I do own it. I believe in it. I believe in its growth story. But I think it's this valuation reset. And a lot of tech companies are going through this valuation reset. I think it's good because it allows us investors to start stacking on and growing our quantity, right? The company is total quality, but as investors, when these valuations come down, that's our opportunity to pounce and start adding to the quantity of shares. So when the market does turn around and make its U-turn and things start marching up again, it will have a bigger effect on our portfolio. So I am not upset that the valuation pulled back in Amberella. I am perfectly okay with that. Like I said, I think I'm going around in circles here, just repeating myself, but it's worth mentioning that I still believe in the growth story. This valuation reset, to me, it just means that I get to have more shares of a quality company. So when the market turns around, it'll have a greater impact and a positive one. So I know it can be tough to um, maybe buy in when the stock is going up. Maybe your cost basis is going up and up and up because you keep adding, and then it to turn around and just pull back and then, have a gap down right here, it can hurt, but it gives you an opportunity to lower your cost basis and build on your quantity of shares, because that's what really matters in the end. It's not that the company has fundamentally changed. It has not. The only thing that has changed is the market environment. So when a company runs into supply issues, the market is going to act negatively towards that. That's all that's happened to Amberella. The fundamentals of the company have not changed. And as long as that remains the case, then it still remains a quality company, in my opinion. Again, not financial advice, but my opinion, and I like the company a lot. And that's why I did a video on them to talk about it, to explain what I see in the company. And if you would like, I can go into the earnings report and pluck out everything, make a video about it, put it out there so you can watch it, and I can go through it that way if you would like to. That way we go into more detail uh, about the company. But just a quick glance here. It was all supply chain. That's what brought the stock down, and a valuation that got a little bit ahead of itself that also brought it down. And macroeconomics, the overall market being in a downtrend, also brought its valuation down. But again, I think it's a good thing in order to build the quantity of stocks that we have. Um, what happened? What's happening with Roblox? Supply chain should not have impacted Roblox. So why is share price dropping? Roblox. All right. No, supply chain does not affect Roblox. Not at all. That's just Amberella, and that was the main problem with Amberella was supply chain. Okay, and its valuation getting ahead of itself. Now with Roblox, Roblox is different. Roblox is slowing user. Its users aren't spending as much time on the platform. That's one of the main reasons why Roblox has come down. One of the main reasons. During their last earnings report, that was the biggest upset. The second reason for why Roblox is falling is also because its valuation got ahead of itself. Everybody was excited about the buzzword metaverse. So the stock got overheated. A lot of hype was in this. This was a momentum mover. There was a lot of trading involved with this. I mean, look at the high volumes when it was at its going up. This last big rally it had before its big drop. Look at the volume. I mean, the volume is so much higher. Right here. This is the tip of the volume versus down here, right? And even back here, when it had its initial rally, volume was still down here, right? And that's a lot lower than where volume was during its last rally. So there was a lot of trading involved with Roblox going up to $141. Now that the market is shifting, and these types of companies, these technology companies, their valuations are going to come back down. And I would not be surprised to see Roblox fall even more, because two things are going on. One, people are going into defensive stocks. Investors are not looking for growth because of interest rate hikes. Investors are not looking for growth companies like Roblox because of inflation. People are not looking for growth companies like Roblox because they want to put their money someplace safe. So what they do is go into defensive. Utilities, healthcare, and that's where they put their money. Go into bonds. They put their money in there because the money is safe. Right now in the market, it is total risk off. And that's going to hurt growth stocks, and that's going to hurt technology stocks. Because when there's risk off sentiment in the market, those type of companies get hurt first, and they get hurt the worst. They have the biggest spikes in volatility. They're going to drop the hardest, but they might even have the biggest rally when things turn around. All right. So with Roblox, it's slower user engagement. That's what their last earnings report showed. And if we pull this up here, let me click on that and that. There we go. They reported 25 cents per share loss, and it was expected to be a 12 cents a share loss. And then revenue wasn't off by too much, only a fraction of a percent. They reported 770 million. Estimate was 772 million. So the biggest was the profit for Roblox. That's what missed by 107%. So those are some of the reasons why Roblox is selling off right now, and they've been selling off. I mean, you can go all the way back here when they reached their top, their height on November the 22nd. Now, with user engagement slowing down, that metric, and let me see if I can't find that number here. Let's see. All right, daily active users. Okay. I'm not finding the number. Okay, here's what they call average bookings per daily active user, ABDAU, for Roblox declined by 22 to 23% year over year for the month of January. That's why Roblox took that big hit. A 22 to 23% decline in average bookings per daily active user. So how much money they're making off of each user every day. That big of a decline, Roblox says that Q4 is typically a slow quarter because kids going back to school. Okay, I can see that. I can understand that. But not everything was bad with Roblox. To give an example here, bookings, which is like revenue, but they call it bookings, grew 20% year over year to $770 million. And the daily active users also jumped 33% year over year, and it was up 5% quarter over quarter. So that is good for Roblox. January daily active users came in at 54.7 million, and that was up 10.5%. So those looked good, but it's how much money Roblox is making off each of those users that's what fell, and that contributed to the gap down from their most recent earnings. Will Roblox reach those highs anytime soon? No, they will not. Roblox will not be back up to $140 anytime soon. Roblox may not be up to $140 even by the end of this year. And the reason why is because these technology companies, these growth companies, more than just a technology company, just because it's a growth company, that is what's going to hamper it going forward for the rest of this year. As rates go up, their future earnings go down. I know it doesn't seem like it should make it should be that way, but just to give an example that really uh, tries to this example isn't exact, but it's an example to help understand. For example, let's say rates go up by 1%. Okay, that means for a growth company, their future earnings are worth 1% less. Now, the math does not work out that way, but that's a simple way to think about it. When rates go up by 1%, future revenue is worth 1% less. So, just a quick, easy way to think about it so you can wrap your head around, well, why wouldn't a growth company grow in this environment where rates are going up? Also, since the market is in turmoil and there's a ton of volatility, the war in Ukraine, it's playing a big part in this race to defensive stocks, all right? And an escape from growth stocks, from technology stocks. Investors and traders, they're looking for companies that make something today, that can be sold today, that makes a profit today. And unfortunately, a growth company doesn't operate that way, especially a growth company that does not have any revenue or any profits yet. Those are the ones that really get hurt. If a company is not making a profit yet, those are the ones that you want to stay away from uh, for the most part. There's an exception always to every rule, but those are the ones that you typically want to stay away from because they're going to be the ones that get hurt the worst over the next several months. Can you talk about CrowdStrike, DWAC, Roku, and Shopify? Sure. Uh, CrowdStrike, I think, is one that will do a decent job because cybersecurity is going to become ever more important, especially with all of the uh, what's happening in the world today, right? With Russia threatening to hack if anyone hacks Russia, and oh my goodness, they're just the cybersecurity business is going to be hot. Now, if we look here on the stock chart for CrowdStrike, yes, it came down after this rally, which peaked on November the 10th, and it dropped like a rock. But since then, it's trying to find its footing, and it's trying to find its footing back where it had it, where it was moving sideways, back here just over my head here, back February 2021, and going back even further, December of 2020. That area there. Now, today it's trying to find an area where it can trade at. And if we look here at these two bottoms that it made, the first one being a low of 153, and then over here, the low was 150. That's the two lows it made, and I find it interesting that they're both in the 150 range. So, CrowdStrike is a company that I could totally grow your quantity of shares, but I would be looking for it sub 160. If it could get below 160 or right on that mark, that's what I would be looking for in CrowdStrike. But again, cybersecurity, it's a big deal, especially with what's happening in the world today, and it's going to continue to be that way. Now, DWAC is just a spec for Truth Social. This is definitely a momentum one. This is not one that I would suggest investing long term for it, just because the volatility in this thing is just going to increase. The closer we get to any type of date around Digital World acquisition and its merger, this is one that you would want to trade, not invest, but trade. Okay. And just because the volatility is going to be crazy. The more news there is coming out, the more people are talking about it, the quicker it's going to run up, and then it's just all going to come right back down again. Now, it seems to be finding a range here right now, with a bottom somewhere 82, 83 price range, and then it's definitely got a lid right around 87, $88 a share. So that's the range that it's finding itself in right now. So I guess about 20 bucks or so of range. But again, this isn't one for investing in because momentum is what moves this one. This is one that I would trade. There's a lot better opportunities out there for investing than this one in particular. But as it gets closer to that merger, there'll probably be a run up, a spike, and then a pullback. So it's one to trade. Roku has gone through a little bit of change lately, and had its pullback here and been in this downtrend. And let me just pull Roku up here. All right, so Roku got into a little trouble over its last earnings. One of the big or problems, or maybe the biggest problem for Roku is Roku ran into headwinds with supply chain problems for its TVs. And that was the biggest problem that Roku faced. I think Roku is still a good long-term candidate because of the shift from investing in traditional TV advertising to investing in streaming, right? So I think there's still a big move there to be made over the long term for Roku. But in the short term, Roku got caught up in headwinds because of supply chain problems with its TVs. Now, advertising, I think, is still going to be good for Roku. But again, Roku is a technology company. And technology companies, obviously, we can see from this chart, uh, have been getting hurt really, really bad. I mean, going from a 52-week high of $490 last July down to where it is now at $121, that's a big fall. That's a really big fall. But that's why Roku has gotten into some trouble here, and it's all to do with their TVs that they sell. All right, it looks like to me that Roku's trying to build a base here, and maybe this last earnings and this low uh, could be an area of support where Roku now starts to move sideways, because it's what I do want to measure this. What is this difference here? Going all the way up to $490 down to where it is today, 121, 75% discount. 75% discount on Roku there. But I think Roku still has a good growth story because of the transition in advertising from your traditional television advertising to streaming advertising. So Roku's still good. Do you think Disney plans to offer Disney Plus with advertisements? Will it affect its share price going forward? Yes, it should. It should also help it. Disney, I think, is a long-term candidate. Um, and I think its theme park is a sleeping dragon. I think Disney Plus is a sleeping dragon or a sleeping giant or however you want to call it. Uh, I still believe in Disney. I own Disney. I'm stacking Disney, growing my quantity of shares because that's what matters right now. And if you look here at Disney, um, 2 quarters ago, it had a big dip down. It was up there 170. It punched over $200 a share last year, but it's been slowly falling down. But it's now trying to find and build an area where it can move sideways. Disney is an excellent company. I think it's great for the long term. Theme parks are going to be excellent. With higher gas prices, people aren't going to be able to hop on a plane and fly to wherever they want to. They're going to have to stay local. And for Disney, that's a good thing in a way because where the local is going to go, they only have one place to go. I mean, if you're in Florida, you're going to Disney. Theme parks are a good idea right now. And not just Disney, but any theme park is a good idea right now. Just because of that lack of flight. So people aren't going to be able to travel very far. Also, hotel rooms are going to be expensive as well. So people are going to stay local, and that bodes well for theme parks. You might think that would be counterintuitive, but it is. Plus, Disney Plus is a huge, huge potential. Look at Disney's market cap, $256 billion. Okay. If we go look at Netflix for just a moment, just pull this up. Netflix has got a market cap of $160 billion. $160 billion. After its big fall here, right? I mean, it was up here at $700 a share, and it's down to $360 a share. That's a big drop too. So even after that drop, it's $160 billion. So when we go back to Disney and we look at that market cap compared to 160, it's 256. Disney's got its theme parks. Disney's got cruise ships, even though that's not a very popular thing right now. Disney's got the movie theater income. Disney has so many more revenue verticals than Netflix does, but Netflix is valued at $160 billion. Disney, 156 billion dollars. So, if you were to add theme parks to Netflix, if you were to add the movie theater experience, think about all the MCU, the Marvel Cinematic Universe, and how many billions of dollars those movies bring in. Just look at the last Spider-Man movie. They bring in billions of dollars. Disney has so many revenue streams that Netflix doesn't have, but Disney's only valued at $256 billion. Netflix, which is only streaming for the most part, is 160 billion. So if you were to really value Disney Plus for what Netflix is valued at, you've got a long ways that you can go in the upwards, up and right on the chart for Disney. So I am a long-term believer in Disney, and I think buying it on weakness right now is a good idea because you're building your quantity of shares. So Disney, good to go. And if you're looking for an entry price, well, if we look here on the chart, it looks like we're getting a bottom for Disney right around, if we look here, this is at 142 and $141 a share. And over here, we're looking at 139, 140, 139, 139, and then we got 138, and then we go to 138 again, 133. So for Disney, if you can get it sub 140, you're getting yourself a deal. And just looking at the lows that Disney has made over the past 3 months, under 140, it hasn't been staying under that for very long. This one time right here, January 20th through January the 28th, that time period there, Disney was below that 140 into the 130s. And that was the only extended time that it was down there. So Disney under $140 a share is a great opportunity to stack up and build that quantity of shares. Yeah, even Star Wars. You're right. So big believer in Disney. Shopify was another one that you asked me about. Shopify has got some problems. And obviously that's reflected in the stock going down. I do believe I had a video that I put out about Shopify over their last earnings report. Feel free to watch that if you haven't already. That goes into great detail, their earnings here that they had. But their last earnings report, $1.36 is what they reported for earnings per share on $1.38 billion for it. And I'm just checking on their earnings here. Yep, I did a video. It's out there for Shopify. Look about February 17th. I think it might be when I was out there. So their growth was slowing down. And they had some catalysts kind of evaporate for them. And that's what hurt them the most there. There was also gross merchandise volume. It increased by 31% to $54.5 billion, which did exceed analyst expectations. which was a good thing for Shopify. Um, let's see, what else did I put in here about it? See, this past quarter two for Shopify, they were very successful with their Black Friday period of time, and did a good job with that. Monthly recurring revenue, which measures the amount spent by merchants on its platform each month, was up 23% to $102 billion. That was the first time in Shopify's history that they broke $100 million for that MRR, monthly recurring revenue, in its history. So that's another good thing for Shopify. Shopify had a couple good metrics in its earnings report that just were kind of overshadowed by the negatives. Let's see here. What else? So one of the biggest things that hit Shopify is its valuation just got really far in front of it. Expensive stock, the price to sales was 18 times, just about, which is obviously lower now with the sell-off, but that's pretty expensive. Let's see, any other. Here's one thing that hit Shopify. Growth outlook for the first half of 22 is soft because Shopify will be lapping challenging year-over-year comparisons. So, as Shopify is moving forward over the next couple of quarters, one thing that is done with everything in the economy is it's compared to what happened a year ago, or compared to what happened a month ago, right? Or to last quarter. There's always that comparison that you'll be able to find. So, with that, when a company does really good one year and has outstanding amount of sales, like Shopify did a year ago, and then this year they only grow, and let's say last year they grew by 20%, right? And then this year they have the same level of sales, but it's just slightly higher by, say, 2%, then they only grew by 2%. And that looks like Shopify did horrible compared to a year earlier where they grew by 20%. But they're still bringing in the same amount of revenue from last year plus 2% more. But 20% looks much bigger than 2%. And that also will show that growth is slowing down at a company. And that can affect a company negatively with their stock price, because you're paying for that growth or expected growth. So when that happens, then the stock's price will come back down. Because remember, the stock market is just a way station for what's going to happen in the future. All right, is tdoc worth buying now, or would you wait? Okay. There's something interesting about tdoc. I just did a video about them. They have a partnership now with Amazon, where right now it's starting with voice, but you'll be able to have a voice conversation with a doctor with through Alexa, and that's going to boost tdoc. That's going to help tdoc. And then video conferencing with a doctor through Alexa will be coming shortly thereafter. I think this is an interesting move because Amazon has a lot of similarities to teladoc and what teladoc does for what Amazon offers their own employees. Well, I think this partnership with teladoc could potentially set up a takeover by Amazon. If we look at teladoc right now, they're worth $11 billion. That's what their market cap is, $11 billion. And that has come down significantly. I mean, just look at the stock chart here and how much it's dropped. It was up here over, did it break 300? Yeah, $308 a share on February 16th, 2021. Okay. $300 a share. And now it's down to $67. That's a big decline. That's a big drop in market capitalization. So Amazon may be running the numbers and saying, you know what, teladoc, if this partnership works out and Amazon likes the functionality that teladoc brings, then I believe Amazon could say, all right, teladoc, you're worth 11 billion right now. How about we call it 20 billion and we buy everything? I think that's a possibility. Maybe 20 billion is a bit rich, but it may not be anywhere near 20 billion. But you get the point. If the partnership works out, I think it really makes Teladoc Health a really good candidate for Amazon to buy it. And with the stock down so much, the C-level, the executives, it'll be a good way out. It'll be a good way to pay off their hard work, right? So I could totally see that happen. So is it worth investing? Well, this is a tough one for me because Teladoc Health would be considered one of the growth companies, right? So if anything crazy happens with the Russia-Ukraine issue, that could hurt this stock significantly more than it's been hurt already. But one thing I do find interesting is over this past earnings period, it hit this low right here of $58.05, and then it bounced from that and actually had one day where it gapped up overnight. And then it's been selling off since then, but it hasn't gotten that low before. So I'm curious to know if maybe this line that I have here for Teladoc Health at $55 a share might be an area where it starts to stack up. And if we go back and look at their history here, this area right here above my head, it was getting down to $55 a share. 55, let's see here, 53, 56. What would this one be? 49, 52, 54, 51, 53, 48. So picking this thing up under $55 a share looks like it could be an interesting place to pick up some shares in case of a possible takeover. But I wouldn't overdo it on Teladoc. All right. What else did you have here? Facebook. Okay. This is a tricky one. Facebook is going through a major change at the company. And that's why this thing just free falled out of the sky with its stock price here. Facebook, there's so many things happening here with Facebook. It's a complicated, tangled up situation. Obviously, Apple changing its privacy settings on its iOS devices caused a major problem for Facebook marketing, Facebook advertising, right? And that's where Facebook gets the majority of its money, through advertising. So, since Facebook wasn't able to efficiently advertise on iOS devices, they did not get a big amount in the revenue department for advertising. That hurt Facebook. That hurt other social media stocks too. Twitter, Snap, for example. Google has announced that it's going to implement a similar feature that iOS did. That's going to hurt Facebook in the future as well. So, Facebook is getting hurt by advertising. Less of it. Facebook is also going through an identity crisis, almost like the tales of a midlife crisis, right? Except Facebook is still a relatively young company, but it's going through a major identity shift. And since investors do not like uncertainty, Facebook is a very risky stock to a lot of investors. Facebook talks a lot about the metaverse, and they're investing a lot of money into the metaverse. But what if the metaverse doesn't become a reality? What if only bits and pieces of the metaverse become a reality and not the full-fledged metaverse that Mark Zuckerberg believes it should be? Then all that investment went towards something that never happened. That's a possibility. That's uncertainty. Investors do not like uncertainty. They like predictability. One company that does really good with predictability is Costco. They do a fantastic job at predictability. So, with Facebook's uncertainty, because it's going through an identity crisis, it doesn't know what it wants to be. Well, I take that back. It has grandiose designs or thoughts or visions of what it wants to be, but it's going to take it an awful long time to get there. Now, if it can get there, and that would be the metaverse, then the investments will pay off. If we all end up living in the metaverse and that's where we go, then Facebook will become a behemoth. But this uncertainty, as it has its identity crisis, is going to keep investors away. And it's going to make the volatility in the stock just like it's been unpredictable. It'll have big losses. It may have a rally or two, but I'm not sure if it's found the bottom yet. And that's what makes me nervous about Facebook. Like, I mean, doing technical analysis on the stock chart here, I mean, there was some reasonable cases to be made for a lot of areas of support that Facebook just completely fell right through. And if we have to start digging deeper, right? If we have to start digging deeper for how low can this thing go? I mean, all realistically here, I mean, this thing could go to 160 with no problem. This thing could drop down to 130, maybe no problem. And if it gets down to $130, then it could go down to 110. And if it can go to 110, then it can go sub 100. So Facebook is one that I would not invest in right now until its identity crisis becomes more clear. Okay. So that's quick talk there about Facebook. Identity crisis, and it's got to figure that out. And until it does, investors will stay away from it. All right. Any other ones that you'd like to talk about? I'd be happy to go through them. I did want to go through Costco and do that deep dive on it, but I may just record that one and then just put it out there over the weekend for you guys, since we've been going for an hour now. But all right, MU, good, okay. Micron. I think I did a video on them too during their last earnings report. So maybe back then. So if we look here, Micron's a good company. They are. Obviously, we got evaluation reset in technology. But if we do a little technical analysis here on the chart, look at this right here as I bring this up together. We can kind of see a similarity. And let me give it a circle here. Right here, this area, okay? And then this area where we are right now. Those two areas there. So if we look, we could probably say that there's probably support right around $80. So I'm going to put a line there. Actually, it's more like $81. Yeah, it's more like 81, maybe 82. So I'm going to put a line there. I need to change that color. Don't want it to be red. It's not negative. It's just a line. Okay, let's put this. I accidentally moved it. All right, so we've got a line there at right about $81, $82 for Micron there as a low for these two areas. And there's a second area. It goes up to about $85. So that's a zone right there for Micron where they like to bounce around at. And there's lots of reactions. We can go over here. It happened. Let's do this. And then here, I mean, I can just make all kinds of circles here where it has made a reaction in this space. For Micron here. So if you're looking for this thing, and another one right there. So there's lots of reactions in that space. And again, we call that $82 to $85 a share. It really likes that area a lot. But we want to get in at the best possible price. So today it got as low as $80.52, which is just slightly out of that, $82 to $85 zone. And today was a bad day. It dropped 8% and another tenth of a percent, 13th of a percent in after hours, a couple pennies. So it's already dipping slightly below that, but still holding above $80 a share. And I really think that if you could catch this thing right under $80, so February 2nd was the last time. No, I have to go back a little bit further. Okay, we have to go back to February the 4th. So a month ago, exactly a month ago. February 4th, it was 79.84. 79.84 a share. And that was the low for the day, and it ended up closing at 81.17 a share. So this stock does not like to get below $80 a share in these two areas. And it's a very strong area for Micron. So what I would be doing is I would set a stock alert for $79.90. Okay. And if it drops below that, then start looking. And what you want to look for is a trend. Right now, we don't really have a trend. And like I said at the very beginning of this video, we're not going to have any clarity in the market until March 16th. And I just put a vertical line there at March 16th. That's when the Fed meets, and then the Fed, Jerome Powell, has his press conference on the afternoon of March 16th, and he says we're either going to be hawkish, dovish, or somewhere in between. And if he comes out with a hawkish stance, then the market's going to go down. If he comes out with a dovish stance, the market's going to go up. And until March 16th, I think the market is going to be trading sideways to get there. And there's going to be no trend that we can identify. It's just going to be moving sideways. That's what I picture for the next 7 trading sessions, moving sideways. And the only thing that would change that is if something drastic happens in Ukraine. Okay. So, yeah, Micron, it's a good, strong company. It's fairly predictable. It's also, if we go back and look at this dip here in October of 21, where it reached that bottom right there, I mean, that was 66 or so dollars a share. But that was in a trend, okay? So if I put this line here, right, like that, and then let me clone it and bring it down to the bottom, we can easily see that there was a trading channel and it was in a downtrend, all right? When it's in a downtrend like that, we don't want to buy unless we're going to dollar cost average and accumulate on the way down. But we don't know where the bottom's going to be when it's in a downtrend like this. Right now, there's no trend, so we don't know which way it's going. But I do think it's going to hold this $80 area at least until March 16th. Okay. So I did more of the technical analysis on Micron because the company's strong. It's good. It's a steady producer. I don't have anything negative about Micron. Obviously, it's going to run into the same other problems as other chip uh, companies out there and manufacturers out there with supply chains and stuff. But overall, it's a strong, steady company. It really likes this $80 area right now. Um, but the market's just going to move sideways until March 16th, and then the Fed's going to come out and say what they're going to do. Now, uh, during during Jerome Powell's testimony to Congress this week, he said in March that quantitative tightening would begin, which means instead of putting money into the market, they're taking money out of the market. Uh, two, rates are going to go up in March. And three, rates are going to go up by 25 basis points in March. So as long as he comes out and says the same thing and says they're going to be cautious, then the market will say, okay, you meant what you said during your testimony to Congress, so we'll rally, at least for a little bit. Unless, again, the black swan here is Ukraine. All right, that was a lot of companies. Hopefully that helps out with your portfolio. I see a lot of technology in there with the names that you asked about. And yeah, everyone likes their technology stocks because uh, when they're profitable, they are profitable and make a good amount of money. Um, but don't forget about other companies that are out there. Maybe spread that around a little bit with some oddballs out there that a lot of people don't talk about. Like one that's done pretty decent for me. That's a little bit different. Um, the ticker symbol here is HPK, and the company is High Peak Energy. Let that load there. This company has been doing really well. Obviously, energy is a big topic right now. But this is a company that in our top 10 stocks list that we put out, this is the number one stock in our top 10 growth stocks right now. And it's been a really good performer for us. And our top 10 growth stocks, just because they have the label as a growth stock, doesn't necessarily mean that it is not profitable or that it is a technology stock. It's just that it's a really, really good company that is a bit on the smaller side. So it's got a $2 billion market cap, and it is a fast growing company. And there's a couple other data points that we look at for determining uh, the ranking for this stock or for growth stocks in general. And yeah, this right now, High Peak Energy, is our number one growth stock right now. And I just updated the list, and I'm getting ready to send it out this evening to all our members. Trade on eToro. HPK is not on the platform. Really? High Peak Energy is not on eToro? Huh. I did not know that. I don't use eToro, so I guess maybe I wouldn't know that. But let's just see here. Um, High peak energy should be on just about anyone out there. All right, so I know a lot of people might have some beef with this suggestion, but uh, I just checked Robinhood because I believe Robinhood is one of the most easiest trading brokerages out there. So I just checked Robinhood. High Peak Energy uh, is on there on the platform. But if you want something a little more sophisticated, then just something like Robinhood. E-Trade is good. Fidelity is another one I like, but uh, those are some bigger companies, bigger brokerages. Let me check and see if Webull has it. Um, yeah, Webull's got it too. Um, so yeah, if you were interested in maybe using one of those two platforms, either Robinhood or Webull, um, High Peak Energy is on both of them. If you're going to pick one, uh, Webull is Robinhood is simple, straightforward. Webull is a little more. I don't want to say complicated, but it's more. It's got more bells and whistles, right? Uh, than Robinhood does. Robinhood is just like a stripped down, clean version of a brokerage app. Webull is a more classy, way more features, uh, and it's definitely more helpful. Once you get past some of the more complexities of it, because it has so many more features, once you get a hang of it, it's pretty easy uh, to use. I use it, uh, but yeah, High Peak Energy is in both of them. For example. And then it's definitely an E-Trade and Fidelity because that's uh, also in other places. And let's see here. Let's go over to, let's look here. How about, let's go with dividend for a moment, just to think outside the box. So right now, at this very moment, on March 1st, this is going to be a bit of an announcement because our members haven't got this yet because I just finished putting it together. But our number one dividend stock right now is Trinity Industries. Ticker symbol is TRN. So make sure you get the right company there. New York Stock Exchange. Trinity Industries, ticker symbol TRN. This is our number one dividend stock right now. And it has a shareholder yield of 29.2%, which is incredible. That's why it's our top dividend. And if you look at the volatility here, I mean, this thing is range bound. And for dividend stocks, there's two main things that you want to look for. Obviously, one of the first things is the dividend yield, and this one is 3.09%. The second thing that you want to look at are companies that are doing share repurchase programs, right? Companies that are buying back shares. And when they are buying back shares, that helps the stock to appreciate, go up. And a lot of dividend stocks, they move sideways um, because they're reliable, low volatility, and sometimes you can get a, a nice run, like this one right here, for example, going back to October of 2020 and the rally to where it is now. I suspect a rally on this one uh, could come after this year kind of gets straightened out and we get back to a trend again. And we get the fear of the Fed out of the way, and we get the fear of Ukraine out of the way. But right now, this thing has got a bottom right around 27 and a top right around $30. So right now, it's kind of at the top of that range. You know, in a down market today, this thing was up 2.1%. Not bad, but it is range bound. So it can go down. Um, so buy it when it's on the bottom. You know, you can sell it on the top. You can swing trade a stock like this, but this is our number one dividend stock. And we've got a couple parameters that we use for finding these. Uh, Two big ones are share repurchases and the dividend yield, and a few other data points that we look at. But yeah, so there's another one that for you that you might like, just to kind of spread out a little bit in this time of uncertainty for some of those tech names that you asked about. Um, how about this? Um, you are welcome. If Chevron, I don't know if you'd be interested in this or not. This thing has just been on fire, but oil is up really high right now. And oil prices is what has caused this to launch. But going back, and the only reason I'm bringing this one up is just to help get the point across. Chevron, and the ticker symbol is CVX. We post our momentum stock list, our top 10 momentum stocks every week. This has been on the top 10 momentum stocks list for weeks and weeks and weeks. I believe since the 3rd of January. So if we go back here to the 3rd of January, which would be right here, measure that close to where it is sitting at right now, is a 35% gain. So, you know, buying this on our weekly recommendation list of the top momentum movers, this one would have gained you 35%. And it's been on the list every week since January 3rd. So just as an example for our momentum, our top 10 momentum stocks list that we put out, uh, I believe that it's one of the most important things to help investors because it helps to guide you towards companies that are moving for the right reasons on the four different categories. All right. So we actually hold them for our members. You can look if you're on YouTube uh, right now with this one. If you click that the join button, it will show you how it's set up, or you can click the first link in the description, or you can click the first link in the live chat, and that will actually take you to our Patreon page, which is set up a little bit different than the way it's set up on YouTube. So there's two different options to get our homework there. Uh, Either the join button on YouTube or uh, going to Ticker Time News /top 10. That takes you to our Patreon page. And there's just two different ways that we set up to distribute this information. So definitely check it out. I think it's worth it. Definitely helps to guide you towards high quality names. All right. Well, it is Friday evening. We've been running here for a while, so you are welcome. I am glad you were here with me today. Glad I could answer your questions. Let's see here. I'll put that link in here just one more time. There you go. If you want, you can click on that. That'll take you directly to it, or click the join button right here on YouTube. There's two different formulas that we have for distributing that information. So you can look at that, pick which one works best for you, and run with it. All right. Well, I guess I'll wrap this up now, and I'll do the Costco thing as a separate video because most important thing to me is answering your questions. So as long as I can do that, it doesn't matter what I have planned to talk about. Your questions are always the most important and the number one thing that I want to talk about during our live streams. So if you are watching the replay of this, feel free to leave the ticker symbol, your question in the comments, and we'll go over it during our next show. We are live here every day the market is open around 5:30 p.m. Eastern. And yeah, so catch you then. Or we post videos throughout the week, almost one every day. Good night from Ireland. Oh, that was cool. Wow. Uh, yeah, my heritage actually goes back to Scotland, but I'm here in Northern Virginia. That's pretty cool. I'm glad I could chat with you. Uh, it's been fun. All right. Well, thank you. And yeah, Ireland. I guess you're about 6 hours or 8 hours, or somewhere around there ahead of us. So yeah, it's definitely late, much later there. So yeah, thank you. Good night. And hopefully I'll see you again in another one of our live streams. So thank you so very much. I greatly appreciate the time that we had today to talk about the stocks that are on your mind. All right. Well, I'll wrap it up here. Thank you again for joining me, and have a good weekend. And I'll see you in the next video. Yeah, 5 hours, midnight. Wow. Yeah, it's definitely late there, huh? All right. Thank you for being here. Great job. Great questions, and glad I could help. So I'll be back live on Monday after the market closes, 5:30 p.m. Eastern time, and yeah. So that's it. Have a good night. Thank you.